Often investors ask, should I reinvest dividends or not? So I thought I'd make a video that's an absolutely interesting observation on the impact of reinvesting dividends, specifically in bond funds, 4 different bond funds. And I'll show you all the data here in a moment. Let's run some disclaimers and get back into the presentation. So a quick reminder of what has happened with interest rates. Specifically, I'm going to use the federal funds rate as the illustrator for this. So the federal funds rate, there we go. The federal funds rate, here's a 10-year chart. We had an increase in the funds rate. COVID hit, there was a massive decrease of interest rates for a few years. And then with the recent concerns about inflation, the Federal Reserve has increased interest rates at a nearly unprecedented pace. And we've leveled off here a little bit over 4%. So that's been a history of the federal funds rate for the past 10 years. And then what I thought I'd do is I'd show you some actual client data, redacted a bit, but I have someone who's been buying 4 different bond funds since about 2017. And so here's a little bit of the data. Then I have to do some math on the data to get it into a presentable format. And then we get to the results. But actually, let me take a step back. On a high level, as far as bonds have been concerned, again, this is the federal funds rate for the past 10 years. What I thought I would do is also, let's ask ChatGPT, what was the 5-year return of the Bloomberg Aggregate Bond Index for the 5 years ended June 30th, 2025? And I chose June 30th, 2025 because I run data every month based upon the S&P and the Bloomberg Aggregate Bond Index. And I knew I had the answer, or at least I have an answer. And let's see what ChatGPT says the answer is. So it had, according to ChatGPT, the Bloomberg U.S. Aggregate Bond Index had an average annualized 5-year return of about negative 0.73 for the 5 years ended June 30th, 2025. So the overall impact of the rise of rates has been that bonds are down. So, well, how about 10 years? All right, so what was the 10-year return? And the 10-year return is about 1.76 a year. And now I have client data for about 8 years of lump sum and systematic investing. And I asked ChatGPT what was the 8-year return, and it said, hey, we really don't know. The bond index numbers are kind of highly guarded, so it's even tough for me to get them on a monthly basis without a subscription. But it reiterated the 5 and 10-year returns for me. It said, hey, I don't know the 8-year number. And then, so ChatGPT says negative 73 and 1.76. I go over to my data and I ask it, and I put in, I see what I have cumulative results. So I have a cumulative negative 3.58 for 5 years ended June 30th, right? And I have a cumulative 19% for 10 years ended June 30th. And then what I do is I check my numbers up here. I say, look, negative 1.073 for, compounded for 5 years is negative 3.7. Their number, again, ChatGPT's number was negative 0.73 for 5 years, so I plug that in. Their results come to negative 3.7. I come to negative 3.58. Close enough, let me tell you, not material. And ChatGPT said 1.76 for 10 years. Gets to 1906. I'm at 1904. Again, let's just call this nearly spot on, so I know my numbers are good. As I keep my sheets, that was a good fact check. But then, what does this mean for the client who lump summed monies and then systematically invested for the past 7 or 8 years? And so let's see what happens. So they decided to invest into 4 different funds. And here was the initial contribution into each fund. 10,695 high yield, 128,015 intermediate term bonds, 20,000 into a money market, and total bond market, right? So actually, excuse me, those weren't the initial contributions. Those were total contributions over the period, initial contributions and systematic, but we'll get to the same results no matter how I cook this. So the market value today of their intentional purchases, and I say intentional, the lump sum contributions and the monthly contributions, the market values are now shown here such that the high yield fund in aggregate has lost $500. The intermediate fund has lost $7,000. The money market hasn't lost anything, and the total bond market fund has lost $3,700. But now the interesting thing is that over this period, dividends have been paid, and each fund had different dividend amounts. And let's see what the impact of the dividends has been. So the dividends paid, I'm calling it interest here, interest and dividends. I'll just use that interchangeably. So the interest paid by each fund, $5,100 for the high yield, $4,758 for the intermediate, $2,700 for the money market, and almost $3,800 for the total bond market fund. Now, but here's the thing, as interest was paid over time, the interest payments reinvested, the reinvestment of interest has had results whether it's increased or decreased. And as it turns out, the market value of the interest payments is even less. So, here we have a situation where principal was invested, goes down in value. Dividends were paid, dividends were reinvested, dividends went down in value. I mean, what else can go wrong? So the end result here, now the market value of the interest, so in aggregate though, we have market values of $15,125, $22.42. So here the client put in $200,911. Coincidental, today's September 12th. Put in $200,911 and now has a portfolio value of $205,856. So actually, it's kind of funny. If you had closed your eyes, I would have said, hey, you gave me, or you invested, however you want to see this, you invested $200,911.93, and today you have $205,856. Super conservative investor. The accounts went up in value. Never mind the rates of return. Never mind what else they could have done. Obviously, there were better investments, but when a conservative person says, hey, listen, I want a portfolio that is conservative, pays dividends and interest, doesn't have the volatility of stocks, this is what you wind up with. All right, so you do what the customer asks, and you put something together for them. Now, admittedly, each fund has had different results, and we could have, hindsight being what it is, maybe had different results by putting more into different funds, but say, hey, here's the high risk of the conservative, the high yield, the highest risk of the conservative. Well, don't do so much of that. And the money market is the most conservative. Well, do some of that and then mix it in between. This is what happens. This is what you get to. So for this conservative investor who, really doesn't like losing money, they put in almost $201,000 and they have $205,000. I mean, mission complete, honestly, for them. Here's the gain and loss relative to the initial investment, almost a little over $4,900 in gains. So, but it's absolutely fascinating how this works out. And again, I created a summary here. They contributed almost $201,000 over the years, and their contributions lost $11,000, such that they have $189. The contributions will be worth $189. However, dividends and interest were paid $16,509. Now again, the dividends and interest lost value such that the value of the dividends and interest are $16,203. However, the total market value of their portfolio went from almost $201 to $205. So their gain relative to the initial investment was $4,944. Now look, I would say in a vacuum, which is how I'm asking for us to look at this today, no other investments considered, not even time frame. I mean, even take away the time frame because that tends to lead you to make a comparison. But someone invested almost $201,000. They have $205,000. The question is, did I make money on my investments? Was my investment a success? So I would say as far as absolute terms, 201 to 205, yeah, it was a success. Focus just on this investment. You put in 201, you have 205. But what happens out there, investments are a live clock. Dividends, interest, principal, fluctuation, absolutely incredible. So should I reinvest my dividends? Well, I would still contend that you should. I mean, should this person have said, well, Chris, I'm no longer in accumulation phase. I need to live off my dividends and interest. Not the case. This person's an accumulator yet. But over the years, a $200,000 investment, they would have been sent they would have been sent $16,000 of dividends, and they could have spent it or whatnot. I don't know. And then their investment here would have been worth 109, 189. Then you get into honestly, you have to remind people, hey, Chris, my 200,000 is at 189. What happened? Well, you were paid out $16,000 of dividend interest, and you got to do all this math. Chris, did I make money on my investment? It actually becomes quite tricky at times. But in this one, the point of this is to bring to your attention, should I reinvest dividends? I generally say yes. Again, unless you need it to live off of, unless you need the dividends and interest for spending monies, I would reinvest dividends and interest generally, right? Generally. And but it can really have mixed results as evidenced here. This is real data over some period of time. And I just thought it was really fascinating. I have seen this over the years, and I finally just thought, let's put this into a video so that many people ask me, Chris, did I make money on my investment? And again, had this person had dividends paid to their bank account, they would have at first blush, without asking, thought their investment from 200 to 189. However, had they remembered they had dividends and interest paid, maybe they could have done the math. Typically, people ask me. It's just absolutely fascinating how dividends and interest work, especially when it comes to bond funds. Stock funds, yes, but especially when it comes to bond funds, the way interest rates have been. So I don't know if you have any funds in a position like this. Perhaps if you see a bond fund that's down, maybe this will bring your awareness to, well, let's see how much of dividends and interest did I earn? Did I reinvest it or not? I don't know. I could go on about this forever, but let's cut it here. I hope that this provided you with some information or something helpful. See you back here next time.